Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it ominous conditions because we're in that transition phase as we're in the intermediate wave 3 to the downside, and we are in the beginning stages, depending on which index you're looking at, of minor 3 of intermediate wave 3. So we're going to talk to all that. I'm going to focus on the S&P 500 today. We'll start off with a brief look at the ETF dashboard, and take a look at the side-by-side with the Dow Industrials, the S&P 500, and the Nasdaq 100. I am, for the first of the year, I'm focusing on the Nasdaq 100 instead of the composite because what do we trade? We trade the Qs, okay? And then we'll take a look at the SPX, take a look at the Elliott Wave picture on it and the SPY, take a look at the VIX, McClellan Oscillator, and then in commodities, I want to look and show you what's going on with the Bloomberg Commodity Index, oil, gold, and silver. Okay, so here's the beginning stages here with the ETF dashboard. The first week is in the books, although it was a holiday shortened week. We had 15 sectors of the 16. 15 of the 16 were up, 1 down. A little bit of a big change from the previous week where we only had 5 up and 11 down. We almost had everything completely positive, but the only one that was negative was healthcare, which was basically flat in here, down a little over 0.1%. Strongest mover home builders, mainly because of interest rates. And by the way, Friday's price action in all the indices salvaged the week. So when you see that the week is positive down here, it's all because of Friday's price action. The full moon Friday, actually called I guess the wolf moon for January is what they call it, the wolf moon, which is kind of interesting, but it was pretty bright last night. Okay, so the other sectors that were right there with the home builders was 5.02 on the communication services and 5.13 on telecom. So the year to date is the exact same because this is the first week of the year. And then here's the picture on the indices. The transportation index blew away everybody else, IWT in here in terms of the move to the upside. So that is the ETF dashboard. And let me go to the side by side and pull that up. Okay, here we go. The industrials were up 485 points for the week. The S&P up 55 points, and the Nasdaq 100 was up 100. So a couple little doji candles here on the Nasdaq 100. It has continued to lead to the downside the entire year. The Dow just seems to be struggling with rolling over, but I think we're going to be getting close in here. That's what we're watching for. When we look at the side-by-side with the Dow Industrials versus the Dow Transports, I've talked about this divergence that showed up where the transports did not confirm this little pullback we had in the Dow Industrials, through that, November high. And now, I think it's rolled over, although we got a little snapback, but shouldn't be surprised at that, given we had 4 weeks pushing to the downside here in the transports. So that is the picture there with the transports, and that is the Dow transports. So let's go take a look at the S&P 500, and I'm going to pull up the moving average view. Okay, so on Friday it rallied 87 points, and for the week up 55. So that's why it would have been a down week if we had closed unchanged, but Friday salvaged the week for all of the major indices. I don't need this showing over here, less than a week. And so that's the picture that we've got just on what I call my moving average view in here. Let's take a look at the Elliott Wave picture, and I'll show you that right here. So here's the weekly view of that. Let me just kind of spread this out a little bit. So I know I've seen some comments where sometimes where you look at the path forwards down here and you look at the placeholders or where the numbers are, and you say, well, Joe's projecting, X, Y, and Z. It is not a prediction or an estimate, I guess, unless I specifically tell you, like I'm about to tell you on minor 3. Everything else is a placeholder unless I tell you that I think this is where that particular wave is going to go. Okay, so right now on minor 3 on the S&P 500, I think if it's a normal length wave 3, based on the way wave 1 and wave 2 have acted, I'm projecting that it would come down here to 2752. Again, when you get into a third wave of a third wave, okay, these things can extend. Of the 3 motive waves, 1, 3, and 5, and that doesn't look right, does it? 1, 3, and 5, the third wave has a tendency to extend, but all 3 of them can do that, can extend. But it's the third wave that is usually the one that will extend. So a normal length wave 3, 2752, we'll see what we get. How do we know? What are we getting? We watch the waves that unfold within that wave structure. And here's where we are right now. So I think right now we're in minute wave 2 on the pullback in here. Not quite sure that this is done. We may have a little bit more to go to the upside. Let me take a look at the SPY, and then I'll show you the intraday on the SPY. So the SPY is going to have the same configuration in here. Let's just go to the focus on the daily. Okay, so here's what's going on with the daily. You know, we've pulled back on the wave 2 into the little bit over 38.2% to the into that zone of 38 to 50%. Now, that's still a pretty shallow pullback for wave 2. So we may have a little bit more to go in here. And when I drill down and take a look at the 130-minute view, which these are the numbers that I use in here on my for intraday, okay? 65-minute, 6 bars a day, 78-minute, 5 bars a day, equal bars. 130 minutes is 3 equal bars a day. So when I look at this picture, you can see that the high in here didn't quite get to the December 15th high over here, but it did get to where it closed. And so in reality, it kind of closed this gap in here with the high that was achieved on Friday. So we'll see whether or not this is all we get, or are we going to continue pushing higher? I mean, we got a gap up in here. We could push, you know, deeper than 50% on a retracement. Now, when I look at the 65-minute view, I could make the case that, well, maybe there is 5 little waves. And as a part of this zigzag, this is what I'm looking at, you know, in terms of, you know, a 5-wave move for C. We'll see. This, you know, they're pretty light in here in terms of a corrective move for the 4th wave. So we'll see if we could, you know, if this is all we get. We're going to find out Monday, Tuesday, if this pulls back down and starts breaking down, or is it going to continue to push higher in here? It seemed like there was something else. Let me look at this. Let's look at the C wave, and I'll show you where is C equaling. Let's compare C to A. Okay, that's pretty messy. Here's what I want to show you. Okay, so we've already gone beyond that in terms of equality. Okay, so the next one I would actually look at is 138.2%. So if we continue to push higher, I could see how maybe we push up to 390 or so, something like that, as a Fibonacci relationship. But again, you know, we'll just have to watch and see how does the price action unfold on Monday. Okay, that's it for the SPY. Let's take a look at the indicators. Let's start off with the VIX. Okay, so look at this mess that's been going on with the VIX, but that's pretty, you know, resembling the choppiness that we've had in the market, right? Going sideways. Well, we were down, what, $1.33 on Friday, down 54 cents for the week. The thing that jumps out at me, we closed at 21.13 over here. Let me get rid of the cursor, the crosshairs for a minute. We closed at 21.13. Well, it's interesting when you go back over here, the week of July 31st, we closed 21.15. Well, that was just a couple of weeks before we exploded to the, after, you know, getting the peak in August or, you know, is right around what, August 20th, 25th, something like that, at the end of intermediate wave 2, depending on which index you're looking at. And then over here, we closed at 2117, and that was what, the week of April 3rd. And so that was, again, after we had just had a pretty good little corrective move in March, and then we started the sell-off again. So, you know, a little bit, we're getting a little bit of a calm before the storm. We definitely have, you know, the ominous conditions that are lining up in terms of where we are with the wave count. So it's kind of interesting that we're sitting with a close for the week on the VIX right at closes that were right before major eruptions. Now, maybe it's a few days, maybe it's a week or so, but I think we're getting very close. Okay, that's the VIX. Now, what's happening with the McClellan Oscillator? It's pulled back up here on Friday to a plus 169. I'm not sure why it's showing you that. Plus 169 is where we are up here on Friday. So above 150, you're in severely overbought territory. So as I like to think of this, as we're stretching the rubber band, and we'll see how much further this thing has really got in it, and then we'll kind of go from there with the Summation Index. This thing was just about ready to break zero, which really would show a reflection of intense selling. And we've turned up a little bit with the last few days of price action. So again, is this just a little blip that we're getting like we did back in early September? Or is it going to be something more? Well, we'll see. But right now, we're definitely getting up into the severely overbought territory in the market. Okay, let's take a look at commodities. Let me pull up the Bloomberg Commodity Index. Now, I hadn't looked at this all week, but these lines I drew in here, I drew a week or two ago. I think I talked about this with my members at least a week ago. This had been consolidating. This looked like a descending triangle pattern to me. And I said, if we get a close down below this support line, I think we're going to be in breakdown mode here. And my projection is down here as a parallel to what we had going down up here. And that, when I look at it, let me get my crosshairs. When I look at that and I say, well, where could we get support? Well, where did support come in? Right over in here, right around 95.6 as it approached all this consolidation. So that's exactly what I would be targeting in here for the Bloomberg Commodity Index. So that really puts it in sync with what I think is happening with oil and what's going on with oil. USL was down 4 cents. I'll come back to the moving average view in a minute. It was down $2.43 for the week. West Texas Intermediate dropped $6.49 on the near-term futures for the week. So pretty negative picture. Come back to oil. Let's look at the Elliott Wave count that I've got. It's kind of interesting that when you look at it on a weekly view, I'm looking at this as an ending diagonal type pattern for wave C. So I've been looking for this third wave to come down in here. And where would I think? Well, here's where that support, like the Bloomberg Commodity Index, coming down to the lows over here in November of 2021, okay? And so I wouldn't be surprised at all to see this work its way down into that kind of level. How fast? I have no idea. But this is the direction, this is the path, this is what I'm looking for. This is not a prediction for wave 3. It's a placeholder. This is what I'm looking for, a path forward. Okay, so that's oil. Let's take a look at gold. Okay, GLD, it was up $3.19 on Friday, up $4.07 for the week. Big, strong move in here. So what am I doing with these number 9 and 13 and the red line? This is Tom DeMark's sequential sell setup and countdown, and it was complete on December 27th. The risk level for that setup was up here at 173.42. We actually closed above it on Friday. So in my opinion, it failed but we may not have all that much further to go. And I do look at DeMarc's sequential sell or sequential setups on almost all my instruments, on all the indices and the favorites and stocks that I watch and trade. I like it. It's one more piece of input that you have into the puzzle. Okay, so when I take a look at gold, GLD, here's what's going on with the Elliott Wave picture. I think we are trying to finish off this C wave in here of an ABC move. I think the B wave is very close to being complete. We're approaching a resistance level here, 174.54. So we'll see how this wave structure in here unfolds. This is getting a little overlappy, so I'm just a little uncertain as to what we may do over the next few days, but this is my target. This is what I'm looking at. Right here, this is where C equals A at 176.94. Okay, so that is gold. Now, gold's been acting, fairly strong here recently. I'm not ready to get into the super bullish camp yet. It just has continued to fail over, the last year. And silver is a lot weaker. Okay, so silver was up 53 cents on Friday, little bounce, down 10 cents for the week on SLV. But I think that this wave structure is a pretty good chance that it's complete in here. And when I look at the Tom DeMarc's setup here on silver on SLV, this is where the sequential sell completed on December 27th. It hasn't failed in terms of the risk level or anything else. It looks like it's trying to roll over. Okay, so this is the Elliott Wave count I've got on this. I think we're getting ready to head south in a third wave. That's what I'm expecting, and we'll see if that's what plays out in here as we come down. Again, this is a path forward, not predicting these prices by a certain time frame or anything else. Okay, that's it for this weekend. I hope you found the video helpful. If you did, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website and check out the membership. Everyone have a great week. We'll talk to you again on the next video.